One of the most important steps of building a solid financial plan is to protect our assets. And the right insurance policies will go a long way towards helping us safeguard our possessions and therefore our wealth. Hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. In today's video, we're going to discuss insurance. I know it may not be the sexiest personal finance topic, but it is crucial that we have the right insurance policies if we want to protect our wealth. So in this video, we're going to discuss 4 insurance policies that you must have in your personal financial plan, and 4 that many people try to sell us, but I would recommend not buying. All right, the number 1 insurance policy that we must have is health insurance. And this probably is the single most important type of insurance that we will ever buy. A study published by the American Journal of Public Health found that 66.5% of bankruptcies in the US are due to medical issues. Serious diseases or injuries easily result in hundreds of thousands of dollars in medical bills. And when we don't have adequate health insurance, these bills can quickly wipe out our savings, retirement accounts, college education funds, and home equity. So if we don't want to leave ourselves and our family wide open to a money disaster, we must have health insurance. Choosing the plan that's right for us may take some research, but it's important we spend the time on this because it serves as our first line of defense against medical debt. For many Americans, we can get our health insurance through our employer or our spouse's employer. In this scenario, our employer subsidizes premiums, meaning the employer pays the bulk of our premium, and we chip in a little each paycheck. However, even if we don't have access to healthcare through our employer, we can still acquire good health insurance through the individual market. And thanks to the Affordable Care Act, or Obamacare, we may be able to buy subsidized insurance on state or federal exchange and get tax credit to help us afford the cost of monthly premiums. There are a wide range of health insurance options: HMOs, PPOs, high deductible plans, etc. The price varies based upon the level of option you select, so you'll need to do some research on what care you need and what's available and offered to you. If you're someone who doesn't incur a lot of health expenses, a high deductible health policy may be the most affordable solution. But if you see the doctor often for any number of reasons, get a policy with higher premiums, but more comprehensive coverage and a lower deductible, so you don't go broke paying for all your services. Under Obamacare, every health insurance plan is required to cover certain basic services before your deductible is met, like preventative care, which is great if you and your family are relatively healthy and all you need are checkups. The law also mandates insurance companies cannot charge more for a health insurance policy if the person has a pre-existing condition. The bottom line is that absolutely everyone needs health insurance because even a minor medical issue can become extremely expensive, and a single hospital stay or surgical procedure could cost many thousands of dollars. If you'd like to learn more about one of my favorite insurance plans, the high deductible plan, because it gives you access to something called the Health Savings Account, HSA, check out my video here. It's a clever way to save money on your investment and taxes. All right, the second insurance policy that we must have is auto insurance. And some level of auto insurance is required by the law in most places in the United States. But even if you're not required to have it, and you're driving an old clunker that's been paid off for years, auto insurance is something you shouldn't skip. If you're involved in an accident and someone is injured or their property is damaged, you may be subject to a lawsuit that could cost you everything that you own. Accidents happen quickly and the results are often tragic. Having no auto insurance or purchasing only the minimum required coverage saves you only a tiny amount of money and puts everything else that you own at risk. Some ways to reduce your auto insurance costs is to understand what coverage you need. If you drive an old beater and you wouldn't be too concerned if it was wrecked in a car accident, you might be able to reduce or even opt out of collision coverage. Coverage that would cover the cost to repair or replace your car if it is damaged or totaled in a wreck. I actually did this with my older vehicles given I wasn't too concerned if my 10-year-old car got banged up or totaled. Coverage you definitely don't want to go without is liability coverage. If you're responsible for an accident, your liability coverage will take care of the cost of any injuries or property damage caused in the collision. And most states make you carry a basic minimum amount of coverage. Another simple way to reduce your insurance premium is to increase your deductible if you rarely use your car insurance. Typically, you can choose a deductible of $250, $500, or $1,000, but amounts can go as high as $2,500. Make sure to shop around for car insurance, or at least check with your existing policyholder to see if you qualify for any discounts. The number 3 insurance policy that we must have is life insurance. And this is especially true if you have individuals depending on you for livelihood. Life insurance provides for our family if we unexpectedly die. If we were to die unexpectedly tomorrow, how would our spouse pay for monthly expenses without our income? The last thing we want for our grieving spouse is for him or her to worry about how to keep food on the table and make the mortgage payment after we're gone. Or how about the funeral cost? The average funeral costs between $7,000 to $9,000. Do we want our family to worry about the financial stress of burying us on top of the emotional loss? But if we had a life insurance policy for 10 to 12 times our annual income, our family wouldn't have to worry about making ends meet, losing the home, or changing college plans if we're not there to provide for them. And I want to clarify, when I'm talking about life insurance, I'm talking specifically and only about term life insurance, not whole, variable, or universal life insurance that many salespeople try to sell. There are many unscrupulous life insurance salespeople who sell policies that earn them high commissions but are not right for us. And most often, if you need just basic life insurance, term is the way to go. And a way to make sure that we get the lowest cost is to ensure that we're as healthy as possible. We'll typically need to undergo a medical exam when we apply for life insurance policy and answer a questionnaire about our hobbies and habits, including whether we smoke or take certain drugs. Ensuring that we're in our tip-top shape will not only make us feel better, but also be good for our wallet. The recommendation with life insurance is to get 20 to 30-year term life insurance, 10 to 12 times our income. And if you already have an insurance company where you get your car and home insurance from, speak to them first. Most often, you can get a discount by getting all your insurance from one place. The number 4 insurance policy that we must have is homeowner or renter's insurance. Homeowner's insurance is not required by state law. However, if we have a mortgage, our lender will require homeowner insurance to protect our investments. And we need this because unless we can afford to pay out of pocket to replace every single thing that we own, which most of us would have a hard time doing. Another more important reason you want homeowner insurance is that it protects us from liability in case someone else gets hurt on our property. Homeowners and renters insurance policies contain 2 different components: liability coverage and property coverage. Liability coverage pays for its costs associated with an injury on our property. If someone slips and falls in our steps, our liability policy will pay for our defense if they sue us. It will also pay for any damages the injured person is awarded. Liability coverage also pays out if our dog bites someone and we're sued. Property coverage pays if something happens to our home or our possessions within it. If our house burns down, or our roof is destroyed by a hailstorm, or our belongings are stolen, our insurance will pay us. Typically, this insurance will also cover us if we're robbed outside of our home. If our laptop is stolen out of our car, the insurance should cover it. We'll need to choose how much liability protection and the property coverage we want to buy. The more coverage we have, the higher the premiums. We'll also need to choose our deductible. As is typical for insurance, a lower deductible means higher premiums, while a higher deductible means we pay more out of pocket if something happens, but our regular premiums are lower. And finally, when it comes to homeowner insurance, make sure we understand what our policy covers and what it doesn't. Based on where we live, some extras that we might want to add are flood insurance, hurricane insurance, or earthquake insurance. Alright, now that we talked about essential insurance policies that we must have, let's talk about a few that are highly marketed, but we definitely shouldn't buy. The first insurance policy that we don't need is extended warranties. Extended warranties are available on a host of appliances and electronics. You see them all the time whenever you're purchasing electronic items, at the store and online. However, the reason so many companies push them is because they're rarely used. A good example of this is with cell phones. For a monthly premium of $4 to $8 per month and a deductible ranging from $25 for a basic phone and $200 for smartphones, extended warranties will replace your phone if it is broken, lost, or stolen. If you have your phone for a year with the cell phone extended warranty, you would have paid about $48 to $96 in premiums. You'll then need to pay the $25 or $200 deductible and probably receive a refurbished phone as a replacement. You can purchase a refurbished phone for less than the extended warranty from eBay or any other phone resellers. Ignore extended warranties. They make tons of sense for the companies selling them, but not for us. The second insurance policy that we don't need is rental car insurance. Before you rent a car, it's worth reviewing the coverage on your personal car insurance policy. If you have a personal car insurance policy, it includes liability coverage and any additional coverage you opt for, such as comprehensive or collision. That coverage may extend to your rental car as long as you drive it for personal use. The coverage limits and deductibles on your personal policy also apply to use of a rental car. In other words, buying rental car insurance coverage may duplicate what you already have. This may not always be the case, but make sure to check before blindly buying rental car insurance because the salespeople at the counter are pushing it on you. The third insurance policy that we don't need is private mortgage insurance, also known as PMI. The infamous private mortgage insurance is well known to homeowners because it increases the cost of their monthly mortgage payments. PMI protects the lender against loss when lending to a high-risk borrower. The borrower pays for this insurance, but derives no benefit. PMI is often required if you purchase a home with a down payment of less than 20% of the home value. The small down payment is viewed as putting you at a risk of defaulting on the loan. PMI typically costs between 0.5% to 1% of the entire loan amount on an annual basis. For a $250,000 loan, the median price of a US home, a family could be spending around $2,500 per year on insurance assuming a 1% PMI fee. That's as much as a small car payment. Unless you think you'll be able to attain a 20% equity in the home within a couple of years, it probably makes sense to wait until you can make a larger down payment or consider a less expensive home, which will make the 20% down payment more affordable. The fourth insurance policy that we don't need is life insurance for children. Life insurance is designed to provide a safety net for our dependents. Because children don't have any dependents and are most likely to grow up safe and healthy, most parents should not purchase life insurance for their kids. Instead, use the money that would have been spent on life insurance to fund an education plan or an individual retirement account. I know insurance isn't an exciting topic to talk about, but it's crucial to protecting our wealth. If you'd like to learn more about other types of insurances, check out my video here. Until next time, all the best.